This is the entry model that changed my whole trading game when it comes to trading with prop firms. It's easy, it's repetitive, it happens all of the time, and it didn't change in such a long time that I've been using this for the last 2 years. It's really valuable and I want to share it step by step today with you. I'm using it on Forex pairs, especially on EURUSD and GBPUSD, and it's a simple strategy that works on the 3-minute time frame in the London session. So if you feel like you can trade on London, if you feel like you can follow the charts every day, and if you feel like you can follow the charts at least 3 or 4 days out of 5, go ahead, watch this and apply it on your prop firm challenge, or why not on your live account with the prop firm. Before going on charts, do not forget to leave a like and a subscribe, and also to visit our website. GoFunded Trader has a lot of challenges prepared for you. We are traders as well. It is a prop firm made by traders for traders, which has the easiest rules ready for you. Okay, so let's see how it goes on chart. Alright, so here we are on charts on GBPUSD on 15 minutes, which is actually the time frame that I check exactly when I'm looking for these opportunities as well. I usually check them on 15 minutes. After that, I will go for 5 minutes, and then I will check for an entry on 3 minutes. Of course, from time to time, I go on higher time frames as well, but the lower time frames work the best for this specific entry because I do not need much. I need to see something like this happening in Asia, which is a range being formed. I do have some strategies for Asia when the market is not in a range. However, I'm going to talk about them in another video, because in this video I want to focus on this specific setup, which is searching for a range like that. After that, I'm looking for the Frankfurt movement and then the London movement, because usually, like most of the times, what is going to happen is for Frankfurt and London to go in one specific direction, and then after taking the sell side liquidity, I will give you an example with sell side liquidity first, it will simply distribute in the other direction. So first of all, it will grab the sell side liquidity, and after that immediately the buy side liquidity, stopping in a POI, in an imbalance area, or some important point that happened in the left. So this is actually my setup. Or if it's the other way around, I will wait for it again and I will observe what happened. But most of the times you can see that this was bullish leg, so most probably it will continue bullish. This is the idea overall. When you check actually what happened to the left, maybe going on a higher time frame as well, you probably realize the fact that a better setup would be for the price to cash the sell side liquidity first and then to continue bullish in order for a higher risk reward and so on. However, if it goes counter trend, if it's the time, for example, first it decides to take the buy side liquidity first, which is this one, and then the sell side liquidity, the distribution, that's great as well. However, when I have the counter trend setups during the day, alright, so first of all, I showed you the model in which the market continues the trend, but what happens when the market is counter trend in London? Because it can happen. There are some moments when simply the market wants to take the buy side liquidity first and then to follow the movement by taking the sell side liquidity and going lower. However, when this is happening, when this move is happening in a counter trend situation, I expect a lower risk reward, because it's not the same thing as continuing the position. When it's continuing the bullish trend, of course, it's going to have more power, it's going to go higher, so of course I expect a 1 to 3 risk reward out of it. But if it's a movement of pullback, for example, I expect it to go somewhere around here, just taking the liquidity grab, or simply swiping this liquidity off, sometimes going here, but no lower than that. Okay, so next, let me see exactly. Let's go on a lower time frame actually to check what is happening. Okay, so like I said, my entry is on 3 minutes and this is what I'm following. So first of all, I want to follow what happens in Frankfurt and then what happens in the first minutes of London. I will explain you what happens step by step in my head, what exactly I'm thinking of when following the charts in real time. All right. So this is the movement, the first movement that I see. I can observe the fact that Frankfurt doesn't really take out the range. It's just creating more candles in the same range. And then let's see what London does. So there were a couple of candles here that continued the range. They grabbed the liquidity from Frankfurt, the buy side liquidity first. So you can see that there was a small liquidity grab over here, and then the price dumped and took finally the overall liquidity, which is the sell side liquidity in here. You can observe that over here. And after that, usually what I would do, if this movement wasn't as hard as this one, if the price didn't push this bearish movement this obvious, like for example, we will see some bullish candles being formed as well. Normally, I would take an entry from here because I expect the price to take the buy side liquidity as well. But it didn't happen, so for me it's clear that it wants to go lower first. I still target this liquidity, but my entry will be way lower because I can see clearly the fact that this is the swing low that is going to be taken, and I want to watch what's happening on the left, why it went this low. So I will go on 5 minutes, and I observe this area of interest, which is a supply to demand area. This situation, this setup is a little bit more complicated because, as I said, usually I expect the market to slow down in order for me to take an entry immediately after the sell side liquidity being taken. But it's not the case, so that's why you have to adapt this setup a little bit from time to time. So what I'm going to do is to actually cover the whole area at this point. It will mess the risk reward a little bit, but it's still good. So I'm gonna take an entry here immediately after this grab, or even a little bit above, with the stop loss covering the whole point. And I will risk 0.5% for this trade. I will split this trade idea in 2 different trades. So I'm gonna go with the first entry, which is this one, and I'm going to set an alert a little bit lower and a buy limit a little bit lower in case that the price comes there. So I'm going to cover the same stop loss, I'm going to cover the same take profit. It's a little bit lower, and in this way, it's basically a smarter way of trading because in this way, you do not miss the movement, but you can also secure the best entry possible for your trade. So you can see here that it's a 1 to 2 risk reward. And then after that, you have a 1 to 4.5 risk reward. 0.5% risk here and 0.5% risk there. I actually want to cover a little bit more. As I said, this is not the best case scenario. I want to see a bullish intention faster, but right now the price decided to dump a little bit to go bearish right before the movement that I expect. Sometimes it goes in my direction, sometimes it doesn't. However, most of the times from my back testing, from my forward testing, and what I used in these 2 years, I observed that it's clearly a good setup and it works multiple times, and you can actually pass challenges only with this one single setup. And also you can clearly use it on your funded account as well because it's easy. You simply follow one single setup that is happening over and over again. Okay, so see here it got a little bit tricky. In this specific setup, I should have went a little bit lower with the stop loss. It's happening. This is a real example. I didn't check for it in advance. So yeah, most likely it went into this imbalance area after taking this liquidity as well. However, let's see if it continues to take the buy side liquidity as I said or not. So yeah, this is happening for me as well from time to time. So first I got in this entry, it got in the second entry as well. If I kept my initial stop loss, of course, it would have been taken out most of the times because it was to the pip. Maybe you get lucky and it doesn't get taken. However, yeah, I should have enlarged my stop loss a little bit in order for this to not happen. But keep in mind the fact that, as I said, sometimes I just go here with my entry. And I do not cover this entire area. I go and cover maximum the Asian low that was formed in that specific day. So let's say that this was the trade. I adapted it a little bit, the stop loss, but it got taken. And here, if I was right now in the live markets, I would have closed both of the trades. Like, this is enough for me. I got a 1 to 1 to 6 risk reward and a 1 to 3 risk reward actually after enlarging the stop loss. So yeah, if you want to play it safe, if you do not want to get taken out from a trade like it happened to me right here, yeah, you can enlarge the stop loss a little bit more, especially if you are okay with a 1 to 1, 1 to 1.5 risk reward. You can find this setup every day. There are a lot of opportunities in the market, so anytime you see something like this on the charts, you can take action and search for the sell side liquidity being taken first, and after that for the buy side liquidity. You can consider this internal liquidity as well, followed by external liquidity. This is another point of view for the same setup. So yeah, this is happening over and over again. Let me look to the left. Yeah, there are multiple possibilities here in which you can go for it. And maybe next time I'm going to explain you what I look for when Asia is not in a range and it has some kind of structure like this one. Like this is a range, but there are some moments when Asia simply goes like this one. See, there are multiple moments when it's a range, but there are simply moments when Asia goes crazy even on Forex pairs. So maybe if you wish for that, I will explain you what I do in this kind of situations as well. Thank you so much for watching. Do not forget to like and subscribe. Do not forget to try this model out, and if it works for you, just let me know in the comments and I would be glad to hear your nice stories. For example, maybe you passed the challenge using this setup, or maybe, why not, I will even interview you after obtaining the live account and withdrawing your first profits with GoldFunded Trader. Thank you so much for watching and see you next time.